Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, Wednesday, huge market rally across the board here. Dow, S&Ps, Russell, all hitting new all-time highs. NASDAQ lagging behind. That's kind of been the story post-election. NASDAQ weaker, but not by much. About 5-6 points shy of all-time highs there on the NASDAQ as well. But folks, we've got a really nice equity going on, or equity rally going on, I should say. Crude was backing off on the Wednesday inventory numbers. We had actually a slightly bigger than expected draw on the stockpiles, but crude still backed off after a nice run after the OPEC meeting. We had gold kind of trying to find a bottom here, and same thing with the bonds. So we'll see all of that on the charts. But as always, we're going to start off our analysis with the S&P 500s. So folks, here it is. One of the things I was talking about here is that little bit of a balance that we were forming up on highs, and I was calling for maybe a potential high handle at this region. We were talking about how the S&Ps were forming that high handle, and that we were seeing a lot of high handles across the board on equity setups. Today we had the S&Ps following through, breaking out into new all-time highs. Lots of stocks across the board breaking out, ripping higher. And so folks, at this point, a lot of stocks also are starting to look extended. So one of the things I've noticed here as I'm running screens is that my screens are getting thinner and thinner, not because the stock strength is weakening, but it's because the setups are becoming too far extended. So I have less and less stocks forming proper chart patterns, which is fine. We'll just have to wait for more of them to set up. But the reason I bring that up is because I want everyone out there who's watching these videos to remember, don't chase stocks. You've got to let the chart pattern set up. You've got to let the trade come to you. Don't chase a stock just because it's up big on the day, there's big volume. You've got to have a strategic tactical location that you're trying to buy that breakout. And if you're not, then you're really just chasing it and you're hoping for continued momentum. And really hoping, folks, is just not a good thing to be doing here in a market. So again, market's all-time highs. Pick your spots accordingly, have your game plan in place, but really we're looking at a nice equity rally here up into new all-time highs, up and over the 2200s. Folks, it really looks like at this point maybe even the 2300s might be a possibility before the end of the year. We'll see. That's about 50-60 points away here on the S&Ps, so not that far away, about 3% higher here to tag those numbers. Let's take a look at the NASDAQ here, NDQC. NASDAQ got almost up to these new highs, but you can tell here that it did not break out from those 5400s. You can also tell here from the relative strength of the NASDAQ that it's been lagging behind. So you see the Russell, the Dow, the S&Ps all hitting new highs, and the reason why the NASDAQ's having some trouble here is look at some of your big cap stocks here. Big cap tech forming bases, right? Correcting, forming bases here. The Amazon down below the 50-day average, Facebook down below 50 and 200-day moving averages. So this is really the reason the NASDAQ's having a hard time. Some of these really big heavyweight tech stocks are kind of holding down the NASDAQ. One that did catch my eye, and I've mentioned this a few times in previous market recaps here, but Microsoft, one of the few big cap tech names that is actually posting up into almost at new all-time highs today. Actually, this is a new all-time closing high. Didn't quite hit a new all-time intraday high, but Microsoft, folks, looking really nicely here. And again, as we talk about these stocks, just want to make it clear, not buy, sell, hold recommendations at all. Just kind of demonstrating what we're seeing across the board in terms of strength or pockets of strength in different areas or industry groups in the market. All right, so as we move on here, just kind of wanted to point out here, take a look at the Russell, IWMs, right? New all-time high there. And here's the Dow Jones as well. Big move. Folks, pretty soon, before you know it, we're going to be talking about Dow potentially 20,000. How crazy is that? Huge move today, up almost 1.5%. Look at the relative strength on the Dow. So what that tells you here is a couple of things. One thing that's benefiting the Dow is it's a price-weighted index, not a market cap-weighted index. But another thing that's highly benefiting the Dow is you've got a lot of industrial and financial names in the Dow that have been doing well. Just for example, like a JP Morgan doing very well. like a Goldman Sachs doing very well. And even some of the industrial names have recovered some as well, something like a Caterpillar, okay, moving higher. And even Microsoft, too, to a certain extent, right, helping out the Dow. So we've got a lot of these industrial names coming out, helping the Dow, boosting it up to new all-time highs. And again, that price weighting makes a huge difference. So folks, the Dow Jones here definitely catching a nice bid in terms of relative strength. All right, so let's move over to some of our external markets here. Taking a look at the gold chart. So one of the things I've been mentioning about gold is it does seem to be doing what I call overlapping ranges or overlapping balances. Basically, it seems like the directional movement every time we broke in a prior low from a prior range bound or a balance has lessened to a degree. And now we're starting to overlap, and basically what that's starting to show me is that the directional momentum is starting to slow, that maybe the sellers are starting to come into equilibrium with potential buyers down here at the 1170s. I mean, folks, if you break down below 1160s, obviously still some sellers in the wings, but right now as the balances are starting to overlap, meaning the highs and lows are no longer so far apart, it does tend to point to markets that are coming into balance. And as you kind of potentially put in a bit of a bottom here on the gold, the first thing I'm going to look for any sign of recovery on gold is you got to get above 1200s. We've talked about in weekly charts before, if you can't get above 1200s, really folks, that opens up the door to a test down at the 1050. So watch the 1200s and our first attempted rally back to the 1200s. If you can hold it and then rally higher, maybe that might be a bottom put in on the gold, but anything right now still is in a bit of weakness here on the GC. Taking a look at the bond contract, bonds actually rallied today as well. Let me pull it up on an intraday chart. So you can see the bonds somewhat rallied today. And again, I've been mentioning on the bonds after such a huge sell-off here in the bond futures and the bond ETFs, that we're starting to come into areas here of prior lows, prior resistance, and prior congestion going back to the 2014 and 13 years. And so to me, that kind of makes sense as an area for, again, selling, or I should say sellers, to come into equilibrium with potential value seekers in terms of bonds, right? Buyers, people who are willing to buy bonds on a price reduction. So we'll see how this balances out over the next several weeks or maybe even months. But for right now, also keep in mind that we've got a news driving event here coming up next week, the FOMC rate announcement. That potentially could rip the bonds higher or lower depending on how the Fed moves on interest rates, and also how Miss Yellen is going to be speaking on some of her outlooks here for the 2017 year. Finally here, as we move over to the crude still battling out, trying to break out up and over these 52 evens. We did pull back today, and one of the things I had mentioned to our trading room is right now, if we let me see if I can zoom out just a little bit. Right now, as you look at this, okay, so our first attempt to try and get up and over those 52s kind of rejected here so far, and we're pulling back down. I'd mentioned to the room, as long as we hold on to these 49.20s, I think we stand a pretty good chance here of continuing to maybe build some sideways range and then attempt another breakout up and above the 52s. If you start to trade below the 49.20s, really that it just destroys kind of the chart setup that we're looking at here. And in fact, this kind of looks like a bit of a cup with a handle that's starting to form. If you start to come down too far, it's almost like you got to start looking for a whole new chart pattern at that point. Also remember, the 49.20s for us holds a little bit of significance because that's the level that somewhat invalidated the potential topping head and shoulders pattern that we were seeing just about 2 weeks ago when we broke out above the 49.20s. Look, the head and shoulders pattern just got thrown out the window. Now we have to just start looking for new chart patterns overall. So folks, at this point, we're looking for the crude to settle in here, form a little bit of a balance above these 49.20s, and maybe make another attempt up and over the 52s. So folks, as we take a look at markets at all-time highs, like look at the Dow, right? Somebody just turned on the turbo boosters right here. We just rocketed right off after the lunchtime trade here. But folks, as we look at the markets at all-time highs, I know that you're going to see a lot of headlines, big whole numbers, news sources that normally don't talk about the stock market are going to start talking about the stock market. Okay, stay focused on the chart patterns. If you don't see any solid chart patterns to trade off of, don't force it. Let the trades come to you. Let the chart patterns form up. A lot of stocks, like I've mentioned, are extended at this point. As you can see here from the Dow and from the Russell charts, a lot of stocks have been running for about 5 weeks straight without any sort of breath. And folks, you know it, the game plan always has been, always will be looking for the very best relative strength stocks, breaking out of recognizable chart patterns and preferably on volume. That's what we're going to be looking for, no matter if the market's making new highs or if the market's pulling back and selling off. That's always what we're going to be looking for, the very best chart patterns breaking out to new all-time highs. But other than that, folks, wishing everyone a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about easy breakouts, go ahead and click that show more right above the comments section to find out more about easy breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.